I've made good investments, but I definitely failed in many investments too. It taught me basically to analyze and understand more about the things I'm investing in to become a better investor. People jump in without knowing what they're doing, without setting the right expectations of their investment, and not even knowing how to validate if the hype is worth it.
There's the next new project, there's the next new project, and so as soon as the next one comes, the market's sort of conditioned to move its attention to the next one, and then the next one is always more valuable than the last one, right? In theory, but that's not really sustainable for a market, right? So how do you get investors, especially if they're looking in the market, to recognize the difference between the hype that everybody's saying right now versus where the true value lies?
Correct. I believe it's always good to
I think it's always great when we sit down to talk about things like an academy that's as powerful as what you've created. So I think it's important that we basically just touch real quick on how you got here and a little bit of that story.
I mean, close to a decade ago, moved to Dubai. Back in 2019, I started in real estate. I started basically by renting and subletting real estate. My career was in financial technology, but I always was looking for the next investment and the ways to create different cash flows.
Right.
So I've made good investments, but I definitely failed in many investments too. It taught me basically to analyze and understand more about the things I'm investing in to become a better investor. And these same principles, obviously, I'm applying in the real estate market, not only with the real estate consultancy, where we advise over 10 million in property transactions every single month. This is in US dollar, by the way, but also when it comes to Property Select and my own purchases.
And so in Property Select, if we just start diving into sort of the meat of like what makes it so different and why it's so powerful, even the concept of trying to help people understand investment strategy, like how to think, right? And I know one of the things that you focus on is judgment over the trend, like really understanding how to analyze and understand the decision as opposed to just going with whatever the trend is. Or even importantly, in like a place like Dubai, it's all hype, right? So there's so much hype. So like just maybe touch on like the overall, like why that's important, especially when it comes to Property Select as the academy, like the focus on that.
See, I believe hype is in every market, and some developers are very good to create hype, and it doesn't mean that that doesn't perform. There are definitely hypes that are worth the hype. Sure. But people jump in without knowing what they're doing, without setting the right expectations of their investment, and not even knowing how to validate if the hype is worth it. Yeah. So if you don't have a strategy, and if you don't understand, let's say, your cash flow or when you need to exit, how can you enter into certain investments where maybe you have to liquidate after a certain timeline and the property didn't appreciate as much as you were told, and now you're stuck?
Right.
What happens? The developer takes your property, your money is lost.
Right.
So you're losing big time, not only that money, but obviously also the cost of opportunity.
Right.
And I've seen this over and over in the market, even with people relatively close to me, friends of friends, that jumped into a hype, jumped onto opportunities, not knowing what they were doing. And basically their money is stuck and they don't perform. When you define strategy and when you have an objective about a certain investment, and you do proper research, you basically can't fail.
And you think that strategy, as opposed to just following the hype, if the opportunity is different once you get into it, because you followed a strategy, you should be able to see if you're on track or off track with that strategy, I'm assuming. So it allows you to make a decision, good or bad, at the right time.
Yeah, correct. Even before your purchase.
Right.
So like in Dubai, you have many launches of projects that basically sell out at the day itself. There could be even good units and bad units.
Right.
Some of them have a very high price per square foot compared to others. And you still need to know what you're doing, even if some projects might appear good or works good for other investors, but doesn't necessarily work well for you.
I guess we'll use the term hype again, but there's so much hype leading from project to project, right? So the goal is always there's the next new project, there's the next new project. And so as soon as the next one comes, the market's sort of conditioned to move its attention to the next one, and then the next one is always more valuable than the last one, right? In theory.
Correct.
But that's not really sustainable for a market, right? So how do you get investors, especially if they're looking in the market, to recognize the difference between the hype that everybody's saying right now versus where the true value lies?
Correct. I believe it's always good to look at the area first, look at the track record of a certain developer,
Right.
but also look at what you expect from your total portfolio. Perhaps with 10, 15, 20%, you can invest in more high risk areas that have a potential higher outcome versus other areas. But you typically don't want to do that with your entire portfolio.
Right.
And I think risk management is very important. Another example of that is when you have a certain budget, you can enter into one-off plan, or you can basically enter and make a down payment for 3 off plans.
Right.
But when you cannot make your 3rd, 4th, or 5th payment and you're stuck and you cannot sell, then you face the problem. Even though theoretically everybody can make those first down payments. So I believe with a small percentage of your portfolio, you can take higher risk. You can identify areas that are upcoming, that are, let's say, in line with the 2040 vision, and will actually result into higher gains compared to, let's say, downtown or the markets that are more established and typically already generate income. But there's a certain strategy that you can follow with that.
Okay, so talk to me a little bit about the mindset that the investors are encouraged to develop, the mindset that they're encouraged to develop through the academy, and like what's the outcome?
So obviously within the academy, we have investors that have huge portfolios in other markets, or even investors already invested in the Dubai market. But many investors, foreign investors, they start from zero when it comes to a new market. What works in this market, what doesn't? It's completely different than another market in the world. And whether it's your first purchase or your 10th purchase, you need to have an investor mindset. And that's also where the risk management ties in. And also the purpose of the investment itself. If you are focused more on the rental income and you have a very clear objective about a certain cash flow you expect out of it, your approach could be to only invest in ready property. And the investor mindset is really understanding that part about yourself, but also in this new market where fluctuations are typically different than other markets. The loan to value in the entire market is very different. So it's really about understanding a market dynamic.
Yeah, so when you're getting started in the academy, or let's say you're an investor and you don't have a ton of experience in real estate per se, but you're a smart person, right? And
Correct.
You're coming into the Dubai market. How do you begin to separate the noise from the data? Like, how do you begin to understand like what is actually proven value versus just noise? Like, how do you help determine that?
That's where data comes into play. So one thing we know is that when something happens, that's the truth we can work with. And that's super important in any market that we look, in this case, at the Dubai Land Department, where we work with actual data, actual track records.
Right.
What happened in the past? We look at that when we look at CVs. We look at that when we work with people. What have they done in the past? What is their track records? We can do the same in the real estate market.
Right.
And that's how you cut through the noise. Everybody can make a nice brochure, but it goes well beyond.
So in that data, especially in Dubai, like you mentioned earlier, that focusing on things like the location and the history of the developer and the track record, right? Some of that, which is part of that data. So in Dubai, in a city that's growing so rapidly and the population is growing, it seems to me, being a new investor to Dubai, that there's always a new area that they're hyping as the area, right? And so if you go back to like traditional real estate, investment thesis, right? Location. That's what's always been the cornerstone of real estate, right? You can't replace a location. So the better the location, the better your investment protected. So
Right.
In a place like Dubai, where it seems like there's so many new great places, how do you separate, how does that show up in the data? Like how does the right location show up in the data?
So per area, you can decide whether it's let's say, when it's land, when it's empty land, it means automatically higher risk. When we talk about an emerging market, we do have some data that we can work with, so we understand that our risk is typically less. When we go to a more developed, established area, we know that the risk is even less, but typically the prices are higher because people that purchased into that area a long time ago, they've already made their profits, and it's proven and validated. So automatically the prices are much higher. When we talk about a new area, we want to talk about the master developer. Who is responsible for this area and what have they done before? You have certain developers, certain master developers that have massive track records in creating master communities. And we can also look at the prices they've launched at, the infrastructure that plays a big role in it, hospitals, schools, the infrastructure itself.
Right.
That's where we look at. But we also look at what is the vision of Dubai. I think unlike many other countries in the world, Dubai has a very strong vision. They have their own 2040 vision.
Which has a map and everything.
Yeah, it has a full map. It has urban areas where they basically dissect Dubai into different key areas, and they have a complete vision and plan for this specific area. So when we decide on a new area, we want to make sure that this is in alignment with the vision of Dubai.
So that vision is it's at least a good roadmap, no pun
Correct.
intended, to basically show where investment is going to flow, right? Because the country, the government is even saying, this is our vision.
Exactly.
Right. So if you wanted to make an investment in an area that you know there is going to be investment flowing, my personal question would be, then it's really about the risk profile based on the timing of that, right? Like how long is it going to take for that vision to come to fruition? So back to your point on if there's raw land, right, there might be a beautiful vision for that, but it's higher risk because it's going to take time and nobody truly knows how that's going to play out.
Exactly.
Right.
Yeah. And that's how we like to define each purchase and define the risk associated to that purchase.
Right.
So we can still make those purchases and there is still gains to be realized in certain areas that are currently nothing.
Right.
And this is happening non-stop. But at least we know beforehand and we can understand if this developer has done that before.
So if you weighed the risk of the location, right, and then you say there's a track record there, because we're talking about a lot of new development, right?
That's
talking
right.
about accepting that there's somebody on the other side of this that is going to do what they say they're going to do.
Yeah.
Right. And so that's the developer, right? So the track record of the developer seems to be extremely important when it comes to Dubai. I mean, you hear this a lot, and there are so many good ones, but there's also so many, right? So it's hard to distinguish, right? So how do you, when you're talking about returns from an investor, you can look at the track record of the developer, but how do you apply that to an actual return? Meaning, like, if a developer could be great, right? Let's say, I don't know if we want to use names, but if we just said like the biggest of the biggest, like it's Emar.
Emar.
If it's Emar, right? They have a history, they have a track record, but what is the proof that there's actually going to be an investment return that's greater than some other one, right? Like, is there something in the data that shows up that says it is more of a smart investment decision to invest in this type of developer?
There would be less risk associated to it.
Okay.
Especially when you have developers where also the government is behind it. You know that they deliver on what they say. I mean, sometimes there's big projects or like, for example, the Expo 2020 tower, the Creek Tower.
Right.
It was launched several times.
Yeah.
And it never got there. It will still be there, but it never got there. So when there are such initiatives and when you link your investment and the value of your investment only on those initiatives that are far in the future, be aware that that might not be there in the future. It's important to look at these things. It's important to include them in your decision, but don't depend your decision solely from an initiative that's going to be there in the future.
What are the things that you have created that you know are going to help the investor understand, make a decision, strategize, plan, and understand the risk profile? All the things we talked about. Like, what are the tools and the things that you created?
So we touch on many different components of what could make an investment a make or a break. And it doesn't mean that one of these components are going to result into a gain or a loss.
Right.
But they all contribute to the success of your investment.
Right.
And for example, if you have a very unfavorable floor plan that just doesn't make any sense, then we should be able to identify that. And especially when you're making a purchase from a different country and you're not involved in that process and you just get a one bet for a good price, then you might think that's a good deal. But you got to make sure you tick all the boxes. Because then you could have identified that, hey, maybe this is the reason why the price is low and you shouldn't do it.
Right.
So what I'm trying to say is there are so many components to a certain property investment, and the way to check all the boxes is by going through the checklist. So we have created several checklists, and for each part of that process, you can basically apply your checklist and make sure that there are no red flags.
So you make sure that none of the points are missed, that everyone would need to consider along the way. Like every decision that someone would need to work through has essentially been dissected into a checklist that is aligned with the experience and the knowledge of someone that's been doing it for a long time, but also understanding this Dubai market, which is very specific, right? So you're combining like the knowledge, the skills, the experience, the time, all the things that someone would need to know, and allowing them to not wonder if they miss the steps that they need to take, so they can ensure that I've done my due diligence.
That's it. I think that's the most important thing.
Yeah.
And the due diligence can go very deep, and that's, again, it also is based on your risk appetite. Some people are willing to take higher risk with certain investment versus others. And some people do want to drill down to the material. And if there is certain material, then do we pay a premium, right? And if there is certain furniture, you should be aware if that's of high quality or if it's not really.
Basically, like, is what they're offering high quality, or is there going to be add-ons and upcharges and extras that you pay for?
Exactly.
Like what's included, what's not, and then what is included? Is it what they say there? Is it cheap or is it high quality?
And on top of that, we actually validate if that is what we agree on. By we, I mean, let's say me buyer and you developer in our agreement, because that's another thing. We can go to a showroom of a car where you see a Mercedes full option is great. Well, then you look in the catalog and it says 40K, great, you get that one, but then the add-ons start.
Yeah.
So you don't want to go to a show apartment, see everything is great, you buy this unit, but then all those things we've seen in the show apartment are add-ons.
Right.
Okay, so we don't have it.
I'll just throw this in there. I think when I've toured new developments, right, and all they have is a show apartment, right? That building isn't even started yet.
Correct.
You do often see the best of what it could be, right?
Yes.
And oftentimes they do tend to highlight the things that are included, but they do not tend to highlight the things that are not included, right? So you have to really dig, right? And so in that market, would you say that it's pretty common that the developer is always going to overbuild the show, the show home or the show apartment, or however they describe them?
Show apartments.
Yeah, are they going to overbuild that, or is it more that they try to do it representative to what the buyer gets, or is it just a mix based on the developer?
It is a mix based on the developer.
Okay.
Absolutely, yeah.
So you're saying as an investor, it's absolutely critical for them as the investor, and I'm almost asking this for myself, right?
Absolutely.
I want to learn. And so as an investor, it's really beholden, or it's upon the investor to go into that show apartment and understand that they have to dig into what's included and what's not. They're not naturally going to come out and tell you. So if you have a checklist of things you know you need to ask, you know you need to investigate, you know how to go beyond the surface level of what most people would do.
Exactly.
And know that these are the things you have to validate.
Yeah.
Including the details of like the faucet,
Yes.
the fixture, the mirror, the whatever it is, right?
Yeah, exactly. So it goes quite deep, but it's essentially, I mean, the beauty and the devil is in the details.
Because they have these checklists now, they have the ability to like really understand how to dissect the investment. But let's talk about some of the more details around how the academy is structured and how it basically guides them in the right direction to start and understand clearly when they get to the end of what it is that it means to be an investor, especially in the Dubai market, and how to analyze. And then maybe we talk about some of the additional tools, kind of like that they can use, like cash flow tools or things to understand like how to measure the investment, right?
Absolutely.
And then maybe some of the technology things that you've helped implement that will allow them to basically use the modern world of things like AI to basically dive in and actually understand their investment.
Yeah. And be efficient.
Right.
Because all of the members are investors, and people don't have time. And people are busy, but they still care about making good investments. And they definitely care about making bad investments and having cost of opportunity, because that's gonna hit very hard. What you wanna do is you wanna make the tool super easy to use. And essentially through prompting, through chatting with your own AI technology, I would say assistant that's trained on the entire academy, it guides you through the academy.
Wow.
And it starts from a very simple objective, basically. So you start with your objective and where we want to go, and understanding the market, understanding the Dubai vision where we just talked about.
And give an example of an objective. Like what would be an objective of a a new investor coming in from, say, like the UK?
There are investors that make only 2-3% in the UK market. They are dependent on that cash flow and they are happy to make double.
Right.
So that objective is making double the returns I'm currently making without paying tax. I mean, that's a great objective. That's a good starting point.
Right.
At least we start realizing these returns and we establish our cash flow. And then we can move to the next purchase and we might have a different objective with that purchase. But each purchase should be intentional and have a certain goal. And when it doesn't produce income, where there could be even delays in building a property or building a building itself, we should be prepared and know that there is no income coming from the property. We should not depend on that.
Yeah, there's not going to be any return for a while.
And it could be even taking longer than we initially anticipated.
Right.
There could be another global crisis. I'm not trying to scare people, but at the end of the day, we want to prepare ourselves, right? We want to understand the risk. And this is basically the starting point is where do we currently stand? Where do we want to be?
And some of the tools that you have to even help them see that, like from the true like analysis of the financial aspect, do you have something that helps them understand like how to look at the deal financially, like to calculate the return? And does it help them also include that upfront if they are investing in, say, an off-plan property that isn't starting for 12 months? Like that part, the money's stagnant, right? They're making nothing on it. So do you help them see like what that overall investment return could be?
You basically forecast the entire investment and you understand your cash flow, you understand your personal income and what is required to make that investment.
In the academy itself, you have some sort of tool that allows them to break down the investment financially.
Yeah, it's a deal analysis. Yeah, it's a deal analysis tool where you look at every deal independently. Obviously, you start first shortlisting the good ones from the bad ones.
Right.
We know that there are many bad ones too, so we filter through them right away. They're not even on the table.
Spend your time on the good ones.
Only. And even within the good ones, you have very high performing assets and the ones that do good outperform the market.
Right.
But how we identify those very high performing units
Right.
by deal analysis in depth. So we apply the checklists to our certain deal. We run the calculations. We run some benchmarking exercises. What I mean by that is we can look at a project in the market right now and we start benchmarking that with what is currently in the market and how much is it producing? How well did it perform? How much rent am I currently making out of that? So that's one way of benchmarking. The other way of benchmarking is benchmark it compared to other off-plan projects in the area that are of the same standard. But to benchmark properly, we cannot take the average price per square foot of an area.
No.
It doesn't make any sense, but that happens way too often.
Because there's a mix of so many things in that
Absolutely.
area.
So you want to make sure you compare it with the right...
Building per building, right?
Exactly.
Almost, right?
Yes, we do that, yeah.
Yeah.
By doing that, you become very realistic about that specific deal and...
I guess what you're saying, or to clarify for myself, is those become the assumptions that you use to analyze your investment opportunity, right? Mm-hmm. So you use those direct, basically competitive analysis
Exactly.
as your assumption. So you know your benchmarking is based in reality, and you can get to a really clear vision of if this investment idea is going to play out the way you think it is, right? Compared to something that's real.
Exactly. And we can forecast those deals, let's say for the next 10 years. We can add financing to it. Let's say we finance at 50%. What does it do to my investment? How does it impact my return on investment? But also, what risk am I taking? If I finance 80% versus 50% and the market drops, are we prepared to go down in our income? Are we able to cover those costs?
Right.
So we include that all in the deal analysis, and that's where you can start comparing them versus each other.
Right.
What can they do in the immediate short term? What are they going to do in the long term, over 10 years, for example?
And the goal of this is really to give that individual a tool that is individual to them, not a generic. And when I say tool, I mean, it's really designed for them to analyze for themselves, right? As an investor, their agenda, their objective,
Correct.
right? Like what their threshold is, right? What their investment appetite is, what their risk profile is, all of the above.
All of these components, yeah.
Yeah. I think that's super important. I think there's so many tools in the market today that, or people that would guide people to investment that is based on, well, this is typically what happens. This is the average. most properties in Dubai return a 7% return, you know, that type of thing. And so people just throw their money out there going, well, it's likely to happen, right? Not specifically tailored to them.
Correct. And also, when we talk about the average performance of the market, it's 6.67% return on investment. That's the highest amongst 25 top cities. This is as per the UBS.
Wow.
So this is a reliable data source. But what does that mean? That's the average market. That's the overall market. Some of these properties, they are outperforming it by double. Some of them, they are performing half of that. So we don't want to be below that 6.67. We definitely want to make sure we hit that and even more than that.
Wow.
But it means that if the average is this, it doesn't mean that you just throw your money in the market and it's going to make that return.
Right.
And I think a lot of people, they don't realize this part.
No, I agree. I think many people do not. I think the type of investor that is going to see the academy, I think or really any investor, but I think the investors that are trying to make the decisions in the right way will understand exactly what you're saying, because this is the linear path that anyone should be taking when they're trying to invest, right? You've got to go through the steps. If you try to just go right to the end and say, I want to invest my money, I hope it works out, you are going to fail. There is no way there. I mean, you might get lucky, but if you do that several times, you will fail.
100%.
Right? So, I think it allows people to go in with confidence and know that they're going to make a strong decision.
100%. And something I use quite a bit is the quote, nobody's going to care as much as you care about your own money.
Right.
To be honest, if you don't really value your money like that, another person is not going to care more for you.
No.
And what is that going to do? If you don't care about your investment, you're not going to perform any research. You're just going to go in blank. And that's going to give very strange returns that you don't understand.
Right.
And most of the times, it's not going to be the greatest investments.
Before we move on to some of like what's going on in terms of like the success and like what you're seeing people get out of the academy, let's just touch on real quick some of the additional things that you have provided for investors that really sort of escalate their ability to execute when it comes to the academy, like some of the integrations that you've been able to establish in terms of like even the things like meetings and stuff that helps them get their whole world view.
Absolutely. So beginning of the year, we start building the entire academy on AI technology to make sure that whatever we do, whatever data we get in, it's going to continue evolving and it's going to stay relevant, because many, I would say, info product, if we refer to the traditional info products, you have information that's relevant at that moment in time. But the data, the world keeps on evolving every single day.
Especially with real estate. I mean, it's like every day's a transaction.
There could be political issues that are part of that impact. So we want to make sure that whatever data we have in there stays relevant and keeps on improving over time. That's where the technology is helping us so much to stay up to date with the data, but also to become better and to understand more. We've interfaced with different systems that we're using within the organization. So we have news articles that come from reliable data sources, or even reports like the UBS report that are very much in depth. We are basically able to scan those reports and to update that data as core knowledge from a reliable source inside the technology.
Right. So they can interface with that not only as an individual thing, like a data point, but it's along with what they know is in the course, right? Or in the academy, right?
That's right.
It's combined with the vision of what they're trying to accomplish.
Yeah, exactly.
Yeah, that's amazing. Give me an idea of how this has been working in real practice. Like, how have some of the investors been utilizing all the knowledge that you have and some of the tools that have been created to really see the value that we're talking about here? Like, what are some of the successes that you've seen?
See, I think in terms of strategy, I have investors that decide on a certain area and they believe that this area is going to serve them. And they've seen in other markets that downtown will always stay downtown.
Right.
And I don't want to go against beliefs. I want to understand why they do that.
Right.
And if they believe that that strategy works, they can stick to that. And in their mind, they were only able to choose between an off-plan and a ready property. And they were not able to find anything that made sense, because the ready properties they found, they were either old or didn't perform very well when it comes to return on investment. And then they had the off-plans, but they didn't want to miss out on 4 years of rental income. So basically, we've decided to buy existing off-plan projects. There's a huge market for off-plan resales.
Right.
And you take over the payment plan of someone else, and this seemed to work perfectly for them. And within, I believe, 2 months they were able to find this off-plan resale. They bought it at that time for almost the same value that the gentleman purchased it for 1.5 years
So
before
not much
that.
of a markup from the original.
Barely any markup.
Barely any markup.
Which is great. It was basically undervalued, and by the time it would hand over, it would have appreciated with about 30%. But against their investment, which was only 40% of that total value,
Right.
obviously that's going to be way more than that. That's
Right.
going to be more than double that. While they were paying off their payment plan, they are already in a position to exit this investment and realize 20% gain over 40% investment.
Right.
And those are some of the success stories that we have where people have, before they purchase a certain expectation, they find what they're looking for, and you immediately see that back into the results and the performance of that asset.
Right.
It will result into 9% return on investment, which is well above the overall.
So really what you're saying there is that they went with a strategy, right? A very clear strategy,
Correct.
right? To first analyze the right investment, but then also the strategy within that was that there was opportunity that was not just visibly seen in the market, right? It's somebody that already bought a property or bought an off-plan property, was in the middle of paying for the down payments of it.
Exactly.
And they were able to step in, take over. And I would bet, and I feel this way because of the investments I've made in Dubai, is that there's a lot of people that are in that early stage of off-plan investment, right?
Exactly.
And so let's say there's 20,000 of them. There's probably a lot more than that. But if there's surely there is more of those opportunities, right? So I would identify that as a clear strategy, not the only strategy, but it is a strategy, right? That someone could deploy if they were looking for that type of investment. And then they followed a checklist and they made sure that it met all the criteria. It was the right developer, right location, all those things.
Exactly. It checked all the boxes.
Checked all the boxes, right?
And in the market, they weren't able to find these options. Off-plan wasn't an option for them, and ready units were
So
not
that
an
in
option.
the middle is it's showing itself.
Exactly.
Right.
Yeah.
So do you feel like there's a lot of opportunities like that? And then are there other strategies? We don't have to go through all of them, but there's other strategies like that that aren't just easily visible.
Another one is anticipation. So, well, I get to anticipation in a second, but I think another good example of that is differentiate yourself. Differentiate by, for example, good interiors when you want to rent it out on the short term.
Right.
Some of them are very high-end. There is a massive market for high-end, short-term rental markets and properties.
So they're already done when you buy them, meaning like they're very, very high end.
High-end, yes. And even what you can do yourself to make it high-end, to optimize the living experience. This is how you differentiate yourself. For example, another client of mine was able to renovate the entire unit, differentiate herself from the rest, and basically have 20% more rental income than others.
Wow.
That's a huge difference.
Just from the design.
Exactly.
Yeah.
And converting the apartment into a loft.
And that's a totally different strategy, right? Now
Exactly.
you're talking about somebody that went from making their margin because they bought a property in the middle of payment and then was able to sell it before handover.
Exactly.
Now all the way to somebody owns the property and they're a different buyer and they're just really good at making it look beautiful.
Exactly.
And it's able to rent for a premium.
Collecting more rent, even able to resell it. It was 30% more within a year because of that renovation.
And would you say that there's going to be different investors always in the market, right? Would you say that going through the academy is just as applicable or helpful for someone that is looking to buy something as more of a true investment, meaning I want to put my money in, I want to get a return, versus somebody that wants to buy real estate, hold it, and rent it long term, right? So basically short-term investor versus long-term investor.
For both of them, it is crucial to know what you're doing, and it's crucial to perform your due diligence, because both serve a different purpose and both have, let's say, characteristics where you want to look at. When you look at an off-plan, you want to look at what's in the area, for example. What are the future plans? Who is behind it? What have they done before? What's the price per square foot? When you just want to rent out a property in the market today, we want to make sure that we use the right data to make the calculation, really understand how much is the net return on investment before we make any purchase. Both have a different strategy, but in both cases, you would still need to properly research what we're doing. We have people that buy one property, we have people that buy 10, 20, 30 properties. We have end users that go through an academy to understand what are they buying for themselves. Because imagine being an end user, buying one property or maybe two properties in your life where you're gonna live for a long time. Right. Well, how valuable is that purchase for you? It's, I would say, more valuable than
the
an
decision's
investment.
Important. Yeah. It's extremely important.
And where do we look at and what is the quality of materials that we can actually still live in this place after 10 years? Right. We need to care about the materials.
Just switching back real quick, just because I think it ties into a little bit of this in terms of investment decision making. When it comes to deciding, like actually deciding, how does someone make the decision if there's like the quality of the developer and the quality of the location? What is, like, just as for almost like your perspective, like what's important, the most important thing that somebody needs to consider when they're thinking about a developer? We'll start there. And then when it comes to location, we'll say the same thing. But if I'm just saying, like, you're just giving me the advice as an individual, because you know this is what people would get to in the academy.
Yeah.
What should I, number one thing I should care about a developer?
When it comes to the investment or the developer itself?
The developer in the investment making decision process.
What have they done? What are they known for?
Right. So they all have a track record's one, but they all have a reputation.
They do have a reputation.
Right.
And for the ones that don't have a reputation, who is behind it?
Right.
And am I paying a premium or am I getting a discount?
Right.
Because it might be worth it to buy something that's at a massive discount because there's a new developer that are proving themselves in the market. That could be a strategy.
Right.
You might take higher risk, but you're getting a very low price per square foot and you're getting potential good value for money. And you can still ensure and follow certain checks that whatever they promise is going to be handed over is actually going to be handed over.
I think one of the things that was valuable to me when we first met, so full disclosure, Philip has helped me make some investments because I've followed some of the strategies. But one of the things along the lines of what you just said was you introduced me to an opportunity that wasn't a developer that was super well known in Dubai,
Exactly.
but they had an unbelievable reputation, right? So that their product, although new to Dubai, right, newer to the market, was technically undervalued slightly because they're coming into the market, they have to prove themselves, but their track record and history was phenomenal, right? And they're a massive company. And so there was a disconnect between what they build and what they offer and what their capability is and their track record and history versus what they were trying to demand as a premium today.
Exactly.
Right. So for me, it was easy to understand when you showed me that there was a clear value proposition from who the person was and what we were getting for our dollar.
And discount we were getting compared to other buildings in that area.
To everything else.
Exactly. Because that's still what's leading. It's leading how it is compared to other projects in that area.
Right.
Because then we know if it's truly undervalued based on today's market. So we still need to analyze the data. It's a certain play, but we need to get a certain discount compared to the other buildings in that area. Exactly. Another example of that is the management and let's say the architect. Right?
What's the quality?
What's the track record of certain architects? They've been involved in many high-end projects that have been consistently delivering.
Right.
And it's the same with branding. Right. We hear great brands, and some of them have track records in a very different industry. Some of them have track records within that same industry. But how do we ensure that we pay the right premium for what we're getting and that it actually has potential?
And not just the name.
Correct.
Right.
And that goes with brand, developer, construction company. So there's three different aspects to that.
Right. Yeah, that's important. So that's actually a very key important when you look at a city like Dubai, who it's branded very well, right? So there's big brands everywhere, even associated with real estate.
Correct.
Right. And this is beyond the developer. We're talking about brands, and we don't have to get into any of them. But how important do you think it is for somebody if they see a flashy brand, right? Just a brand that they know. How important do you think it is for them to even more so do the due diligence on all the things that we talked about and things like checklists and going through the investment strategy, as opposed to just saying, Well, it's that brand. It has to be good.
Correct.
Right? How important is that for people to understand that you cannot just buy a name on a building?
Besides the brand, who is going to do the work? And what is their track record in either a luxury segment, whether it's related to that brand, or maybe a completely different segment?
Right.
And what is the premium that we're paying for that brand?
Because the way I think about that is it's not so much, is it going to be a great project and is it going to be successful? Because usually the brands are going to attach themselves with successful projects, but it's more about, is it a good investment decision, which is what we're talking about.
Yeah.
So that's really how I'm thinking about it. Is it doesn't mean that it's a great investment decision just because it has a flashy name.
Brand, exactly.
Yeah.
It's the same with watches, right? There are nice watches, there are nice brands. There are even within those watches brands, there are ones that perform greatly and ones that don't perform at all.
That's a great analogy. That's exactly where I was going with it. Yeah. But they're all great watches, but some hold their investment really well.
Exactly.
Right. And
Scarcity.
Scarcity and the quality, like the uniqueness, the differentiator. Some are hand built, some are factory built. That type of thing. So all great points.
The anticipation part. When we do investments and we have investors that have a certain strategy that before their investment seems great, like renting it out short term,
Right.
but once they're in that process, and you can get indications of the short-term income you can get, but you never truly know. It's always seasonal. You're always working with data and with projected population, but also the supply within that area.
Right.
So we need to anticipate. We need to know that if the supply is going up or the performance isn't what we were expecting, how fast can we identify and act on it?
Right.
Some people sit back and say, well, it should have appreciated so much, or it should have made me so much income. But if we identify that it's not and we gave it enough time, then we need to be able to shift quickly.
Right.
And that's what we've done. We went from short-term rental after 2-3 months immediately to long-term rental, and we made even more on the long term versus the short term.
Yeah.
But anticipation and be able to action is something super crucial to that.
You're saying that understanding what's going on, and if you need to shift that investment thesis or idea, you know when and how to do it, right?
Exactly.
So in that case, if you would have just ridden out the short-term investment strategy, you're saying you would have done much worse.
Exactly.
But because you pivoted and switched to long-term, it played out.
Yeah.
That's amazing.
And you should be able to anticipate, and sometimes, in this case, let's say take loss, but it could have been a take gain. So when you identify, okay, we're taking a loss, let's take the loss right away. Let's get the angle out of the wound, let's say, and switch and action and make sure that we realize something that's actually sustainable.
Right.
But also, do you have the right partners? So part of the academy and the technology platform is the partners. We have a network of trusted professionals in Dubai industry that help with non-resident bank accounts, mortgage advice, legal advice, property inspection, many different aspects related to real estate or related to shifting from one place to the other.
So that's a very key point. I'm glad you brought that up, because I think even for me, one of the things that I learned coming into Dubai real estate is it's not just about coming in and making an investment in a new, growing, high demand area, right? This is a country that has a different way of doing it than maybe where you're from. And so part of the academy is to help people understand all the steps that they need to go through in order to invest in Dubai, right? And even things like what you mentioned, understanding that you have all the relationships and all the partnerships, whether it is the banking or understanding the tax regulations and liabilities, all of those things that are going to come along with any investment in any country, that you have all of those, not just the how to do it, you have the direct connections to actually get it done.
Correct.
Yeah, super valuable.
It's so valuable. We have clients that basically the value of what they're extracting from one partner is what pays for the entire value of the academy. Yeah. And that's crazy, because when you're not aware, for example, FX rates, right?
Right.
A lot of people are not aware that they pay super high spreads when it comes to the conversion of their currencies.
Right.
Because when you deal in US dollar, you deal in US dollar. And when that's your market and your bread and butter, you might not be aware of the different currencies and the spreads that are being taken
Right.
on those conversions.
Right.
So we have investors that got installment reminders from the developers with a markup of 5, 6, 7%.
Okay.
The highest was close to 7% spread.
Right.
So we brought it down to 1%, which is far below what the
And how do
banks
you do
charge.
that?
We have partners. We have trusted treasury partners.
So basically, they just make sure that the spread is in line with something that's more reasonable and not inflated.
Correct. We undercut the banks by that. Well, these are partners that are in the financial industry.
Wow.
But since I also have that financial technology background where we were dealing with all these banks, I knew this is a pain point for big corporations.
Right.
Most of the people are not even aware about this.
Yeah, it's so critical. And think about that over long term. If people are making an investment or even on a payment plan, right? They could be dealing with that a lot.
Correct.
And so I think a lot of investors would not even consider that. And they would get to that point where the payment is due or they're making the investment and they're wiring the money and they just pay it. They don't even think, and you don't realize how much money you're leaving on the table by just making these quick decisions, right? So going through something like the Academy, you basically, like you said, you could save the entire value of the Academy just in one part of a partnership that gives you the right advice and access.
And taken care of. I mean, at the end of the day, you pay a certain price for something, so you know that there's value in return. So you're being taken care of. Another example is I've had investors that couldn't pay the property because of the spread.
Wow.
So they budgeted and they said, this is budgeted in euros based on today's FX change.
They literally couldn't afford it.
Exactly.
Wow.
Yeah.
Because if you add 5 to 7% to something, that's a lot. I mean, that can be a massive increase. Yeah, that's crazy.
On top of that is, for example, collecting rent. So how do we collect rent? If we are paying first so much spread or fees on the FX conversion, but then we need to collect rent, let's say in the Netherlands or in the US, wherever it is, and it's being collected in a different currency, now we're paying double. That could be solved by opening a non-resident bank account. Right. So even things like that are simple solutions, but they solve massive problems.
And that's not just obvious in the market when somebody comes in to invest in Dubai. So you really have to have somebody walking you through this and giving you the access to be able to take advantage of these things, right? If you just show up in Dubai, it's not just going to be obvious that this is a way to do it.
Exactly.
Right. So I think it's amazing ability to give people everything they need, right? And that's really what I think it boils down to. What would you want investors to know of why it's critical that they learn how important it is to have something like this Academy? Like, why is it important for them?
What do I want my investors to know? I want them to know that when they work with data and when they work with facts and understanding what they're looking for, it's going to give them the most confidence about their decisions, and it's going to cut out all the noise. It's going to cut out all the deals that are not serving them, and at least they are able to identify them. As a person, I think in general, and definitely as an investor, you don't necessarily want to be dependent. You're working with people, but you should know very well what you're doing and what you're trying to achieve. And how do I do that? How do I get to the right data? How do I get the right tools and know that what I'm doing is serving the objective? And when I'm working with other people, at least I know how to validate what I'm getting.
So it sounds like that at least for me, and this is what it's done for me, even your knowledge is it instills confidence and a clear direction of how to execute what we're trying to do as investors, right? It gives us the confidence and the ability to go make a good decision, a smart decision.
Exactly.
Yeah.
And obviously that compounds over time.
Right.
It's also a lifetime skill. Once you understand on how to do that, it's rinse and repeat. It could be applied to many different, even segments. That compounding effect in investment, I mean, also that's obviously resulting into significant gains. And that's the end goal. There should be a win-win. Like the end goal is significant gains. That's what we're doing.
We're all trying to make good investment decisions.
Exactly.
We all need a roadmap to get there.
Yes.
We all are smart. If you're in the investment world, you're trying to make a decision like investing in Dubai or in a city like Dubai, obviously you're thinking wisely, right? You're trying to make investment decisions, but we all need help, right? We all need assistance on how to get there. And somebody else usually has all the knowledge or a lot of the knowledge, right? And so the way I look at things like this, or specifically this Academy, is like it's me being able to basically take advantage and use all the condensed knowledge that has already been captured.
Correct.
I don't have to go back and figure it out. I can just take it. And so I'm happy to take your knowledge.
Yes, and it's, I mean, it took you a while to basically talk to some brokers and trying to get feeling. I think you spoke to.
I had a very difficult time when I got to Dubai. I met with many great people, right? Great brokers, great real estate professionals, very intelligent, but I'm a real estate investor by trade. And so I come from that real estate or the US market where I've been doing real estate for 25 years. And so I know how to make an investment decision. What I didn't know is how that was different from the US. And what I didn't know is all the secrets and the knowledge that is underlying a real estate market like Dubai. And so I needed to learn that. And what I wasn't getting from the brokers is that. What I was mostly getting was the hype.
Yeah.
And so when I would probe with the technical, more detailed, like my version of the checklist, right, which was not aligned with Dubai, it was aligned with what I knew. So I was doing my best, but I knew I wasn't getting the response I needed. And so to give the confidence, right? So what I wasn't getting is confidence. What I was getting is, I was getting pushed away mentally that I couldn't make a decision with this person, right? And it wasn't anything wrong with them per se. It's just that it wasn't structured to give an investor like me the knowledge that I needed. A traditional person coming in trying to buy an apartment or rent an apartment, sure, the brokers, a lot of them are very good at helping you find things. I'm an investor. I'm trying to make a smarter decision. And so it wasn't until I talked to you where I finally had a conversation where I was like, this person understands the strategy and the ideas around making a smart decision. And they clearly said, this is why you need to be here. This is the area. This is the reason. This is the developer. All the things that I would check the box on, you came right out the gate with.
Yeah.
And so that's why it was clear to me that that at least I knew there was somebody who had the investment strategy understanding and how to implement it. And then turns out you have all of it, right? And so I was super grateful, super helpful for me. So I wouldn't be here if it wasn't for that.
Yeah.
So
Yeah. Excellent. Great.
all right, Philip, great conversation.
Thank you so
I thought
much.
that was great.
Yes.